Good morning. I'm wondering, as I started looking at a few things here this morning, I was kind of a little surprised. I was thinking, is this rally almost over? And I'm not sure it's over today, but I'm kind of thinking it's close. Mm, There's a coming up to the 20 MA there. That's typically going to be the stopping point. Sometimes it gets between the MAs, and that's a pretty good distance away. The breadth is almost to zero. And usually after a down move like that, the breadth coming up to zero, and it isn't touching there yet. So maybe it continues to push up today. The hourly is still in an uptrend. Momentum is slowing. It doesn't mean there's a change, but breaking below these two pivot lows would be a beginning of a change. You can see the move off of the low there, came down. This power move up. So coming down, it didn't break any support. Bottoming tails went back up again. And now the distance between the highs is getting closer together. This skin could pick up momentum, right? and get a nice distance above the highs. So it's something to keep an eye on. No matter what, looking at the S&Ps here, whether it's this or anything else, the analysis is the same. It got through S&Ps got through 4,500, it closed above it. That's good. Usually these things kind of go pretty much in 100-point increments where you have the big open interest, but there's typically some at the 25 levels, like 45 and a quarter, 50, 75, but the 100-point levels are the big numbers. And then the 20 MA here, like in between things. So one of the things that caught my eye this morning, besides that, was the 3-month yield. And it gapped up. And look at this move. So we probably heard speculation, will they raise a 0.5 percentage point the first time? And I see this morning and I'm like, the market's starting to think that. And if the market's starting to think that, well, maybe they're going to get a little nervous, and, the thought of, does it get to the 20 MA, breadth at the zero line? Maybe selling starts a little sooner than maybe what it might, just based on the chart pattern. So, those are just thoughts. They're not facts or reality yet, but, we look at charts and we look at intermarket relationships and internals and so on, and kind of come to some belief about what the future is going to bring. So that's where I'm at with that. The other, this is down a little bit, the 5-year, the 10-year down a little bit. And so we got the 3-month popping up, these coming in a little bit, nothing serious yet, but, step by step, All right. Futures, as we always look here, we've got converging 20 into the 200. They're just lines. They're subjective. We pick whether we want simple or exponential or any other type, but we've got two moving averages converging, which means we've got two time frames and different traders looking at an inflection point. There's some overlapping bars over here, and just the 200 in of itself. These are the futures. We'll look at where the Qs are. I'll just scroll this over to the left there and see what's real, and that's subjective. And so the real resistance is up here, right? We'll just call it an area, right? Give or take. And there you go, whatever. 15,200-ish, not that far away. So maybe it pushes up through the 200 and in alignment with looking at the S&Ps, they can push up a bit more. So again, this was a very powerful move to the downside, and historically that kind of move either gets retested or it makes new lows, and we shouldn't get too enamored by this move off of the low because of what we've been talking about here. Want to be careful. Qs, they're at the 200. There's the 20. Now it does have a void. So looking at the interest rates, looking at internals and so on, it still does have a void before it hits some type of resistance area to the left, whereas right here, there's nothing. Now, that doesn't mean it has to go there. Right? Resistance can be created. We have to be objective and open-minded about what we see. And as long as it continues to move up, terrific. But now we've got a range expansion bar. So here we had range expansion bar igniting the move up, which suggested it'll keep going. And so there was buying it, into the end of the day. And this is obviously you can see the Qs. It was buying into the end of the day, where they hit 364 and change. So they're up a little bit. But when we get a range expansion bar, especially after a little congestion like that, that becomes a significant line in the sand. It's not a pivot. You don't see any pivots here on the hourly chart because the momentum was so strong. But when we get a range expansion bar, obviously it means that there was much more buying. Where here it was consolidating, bullish price action at resistance, and buyers say, hey, you know what? It ain't going to pull back. Where I'm going to get in at a better price. Where my assumption is it keeps going up because of how it started the move. So when you get the range expansion bar, you put that as your line in the sand. And so, well, if it breaks that, that's going to be a problem because it's not supposed to be, because the pattern now displays that institutions believe this is going to keep going up because this is where they want to sell, right? As a starting point. And this isn't a downtrend, not in an uptrend. So while if this multiple time frame picture was in an uptrend and we said, hey, the hourly chart is reaching a destination point, that doesn't mean it won't continue to go higher. It just means, right, it should probably stall there and mark some time and digest that resistance area. So daily chart down, converging moving averages, overhead resistance here. We'll see if it can keep going. We've got these interest rates. It is like a little fly in the ointment. What the hell's going on there? If these things are going up like that. And just set an alert there at 360. If you're trading something and everything's looking, just fine, and that alert goes off, you know what to think. Dow here, slowing momentum. So I only use I don't have these updated here like a lot of times I do as to where support and resistance is that was down there because I don't use this on this computer during the trading day. So that's why my red line was down there. Anyway, you got a couple of pivots here. Momentum is slowing. If it breaks down below here, it opens the door to this becoming a red bar. Really not a big deal. Today could be a consolidation day. We might get a red bar and it chops around and then, 2 days later, it pushes up here. And so we start today with what's going on, where things in support, resistance, is there a void? Has support been created? Resistance been created? Have there been any range expansion bars? And so on. That's what we call the factory work. It's been the weakest. It's still the weakest. It's coming up into resistance sooner. It may never get to the 20 MA. Is there anything to the left? Yeah. Let's drag that down there. It's already into some overhead resistance and the momentum is slowing. All right. The move up is similar to what we saw in the others, but today or overnight, momentum is slowing down. Pretty simple. And Bitcoin doing absolutely nothing but holding its ground here. And set an alert under yesterday's low. Just be aware. If this starts going down, it could be a heads up. We're just setting an alert right here. We've got the same pivots. Right? So it's not exactly the same, but somewhat similar. And this got rejected and got bought. But battle is starting to go on here. This thing flipping back and forth. Set an alert. Crude oil. Still still doing okay, but sideways. And it's had a long run. It's getting pretty messy up here. You can see the tails and the range on the daily chart, but starting to get really whippy and wild, which often precedes some type of a turn or retracement. In this case, since it's been going up, and this is what's been leading. A couple of weeks ago, we mentioned the greater than 100% retracement, and a lot of times that's a turning point. Doesn't turn on a dime. But you can see things have gotten kind of whippy, and the upside momentum has stalled. So it's a great concept to keep yourself in check. As you know, we have different concepts like bars like this, correction bars after a move off of a low, and looking to the left. Greater than 100% retracement is another good concept. Made a big move. Odds are it's going to stall. So far, it's stalled and no significant damage done. Breaking under these lows will probably bring in a bit more selling. And if that happens, the energy stocks, which have been doing well, some of them will get sold, and some leaders, money will come out of that. But we got these other concerns here this morning. Interest rates, short-term interest rates going up. The markets look like they can go a bit higher. So keeping it all in perspective. And look at the VIX. And so if we were looking at this as a stock, it was like, wow, this thing's been ripping to the upside. And now it's pulling back into an area of support. And, it's inverse with the markets, but, it's pulling back to where this would be a probable turning point. So if the VIX is at a probable turning point where it would turn up, that means the market is close to a probable turning point where it'll turn down. And, back here, we were saying, hey, keep an eye on around this 40 level. If you look over to the left there's a prior high. So it's a good measurement of confirmation for resistance. Sometimes you see something here and the market will have nothing to the left down below. So it'll serve as a good reference point for that. And it gives you confirmation, even intraday, to see, hey, if it's going down, things are just, the way they should be as the market's going up, and vice versa. Yeah, we could look at the SPY chart. So nice day. Most times I would say, hey, let's have a third day up to the resistance area. It might happen. Things are slower this morning, but the things that I'm pointing to, that's kind of the concern here, and the futures where they're at. This would be the 20. Sometimes they get in between. As I mentioned, it was yesterday. The further this gets toward, if it can get above the 50, it really throws a wrench in the idea of the next decline being something of significance. But if this tags the 20 and starts rolling over, probably I'm just up by historical price patterns, I think, guides me as to what is likely to happen. So if this goes up here, because of the power of the move up, the size of these bars, if it hits here and goes sideways for a few days, and especially, this what we talked about here, if we get a situation where some sideways for a couple of days and we get an up bar like that, where it's a little range expansion bar, and then it breaks down underneath it, that's a short setup. That would be a little bit of a shock pattern on the daily chart within a downtrend, within an area where it should turn down. And that could be one of the pictures, right? The pictures are endless. And that's why we utilize what we call bar by bar analysis. We don't know what the picture is going to be that's going to develop, but bar by bar analysis is a tool that I don't need to know what the picture is going to be. I know if it does this in this area, that's a bearish event. There are other bearish events. It could be like this, and the next bar could be a red bar down that takes it out. So whatever happens, we'll assess it. We're at 450.50, 450.50. No, it's up a little bit here. Not a big deal. Things are stalled right now. So there's some hesitation. Maybe it's just a little rest after an up day like that. But so one of the, we have a lot of nuances or concepts, call them whatever, thought processes. I like to call the modules in the course a thought process because we're pattern readers. And patterns create thoughts and beliefs and expectations. So, where was I going with that? My phone made some noise. It threw my thoughts out. But look, this could just be a resting period here this morning, as this is the momentum slowing, and then it just pushes higher. But as each bar forms, it creates thoughts as to what's supposed to happen next. Right? So with this pattern down here creates a thought that it should go up. And this bar here creates a thought. It took out the high. Momentum is stalled. It might pull back. And then it continues up and it continues up. And now we've got this picture, which is one in which it should either go sideways or up. Going back down is not in alignment with what's happening here. It won't negate this. So look, let's assume for a moment, just to share the thoughts, because the thoughts are what we call our factory work, that, hey, now we've got a wide range bar. So even if this comes down under here, right, it could repair that damage. But the deeper it closes into this larger bar, the more things start to look like we ain't getting up here. So this is all common sense once you start putting it all together. Yeah, silver. It's on support. Buyers are there, right? Bouncing up again. Gold on support, bouncing up. And so here we've got the opposite, right? Kind of the opposite of what we were talking about with equities, in that, well, this broke down. And this is starting to come up here, but how deep can it get into this red bar? If this green bar, right, grows and it hits the 20 and it gets up to the top of that bar, well, that's a pretty significant move after a nasty move to the downside. And so this pattern, which we were talking about back then last week, which was so bullish, and I said, hey, this looks fantastic. And then the Fed comes out and, it did what it wasn't supposed to do. And that's why we have stop losses. And it broke out and it didn't work. And of course, why did it have such a violent move to the downside? Because the pattern communicated that the majority were thinking it was going to go up and were long. So those that look at indicators are like, maybe they're probably all their indicators were lined up here with the pattern. And indicators can't lead the pattern. They can only follow the pattern. And they see, what the hell happened here? My indicators didn't tell me this was going to happen. Well, if you apply the psychology of the pattern to bar by bar analysis, you know what's not supposed to happen. And if this fails, it's not going to be a good situation, because this picture communicates the majorities are thinking it's going up. All right. Transports don't look so good. Right? Coming up to resistance already. And what else here? There's really not much or anything else. I mean, euro bouncing up. So it looked like it was going to go higher and it broke down. So, the dollar gained strength again, of course, because it might be unusual for the dollar to really weaken when you've got short-term interest rates going up like that. So, all yours, Dan.
Good morning. I see Detective, my little credit spread assistant. Very good. Yeah, so we nailed the bullish entry. We've been talking about this turn for a while. We executed beautifully. And the more it gets extended, the harder it is to get on board, at least for swing. Day trade still might be fun. But look at this big list of still put spread candidates I found. So look at this one right here, BNTX. I know it's one of these Corona bio stocks, but that's a, little higher low, closing breakout yesterday and gapping up. So it's a put spread idea. It's extended here now on the 20, but let's watch it on a pullback. I forgot to check his cousin Myrna. There's another one. It's in a downtrend, but you got a little rounding bottom. Today's Tuesday. If we do a 3 DTE. So that's another one, detective. Boeing, we were talking about yesterday. Nice reversal on major support. Nice pre-market. I did look yesterday. I wasn't crazy about the juice for this Friday. So then the problem with going out 11 days is what Greg just talked about. If we get a short-term bounce in the market that's stalling already, do we really want to be having 11 days of risk? That's the problem. The Upstart, this looks great. Bottoming pattern. It's been lagging a little bit. It didn't participate anywhere near as much as the broader markets the last 2 days, but I like the gap up. So I have that in a bottom right window here. Chewy was on our list yesterday. Beautiful close, beautiful reversal and sideways action. Still a price void. Target, I was saying all day yesterday, target 50. Or maybe more, 50, 52. It did not have good premium for put spread though. On NVIDIA, I tightened the stop. This was a beautiful, beautiful turn. We still traded all kinds of bullish patterns and pullbacks and uptrends and so forth. But I would say the last couple of days here, this has been our primary focus. Climbos with bullish multi-day turns. We did a put spread on this yesterday. So I tightened the stop here with the gap up. AT&T is spinning off one of its cable divisions or whatever. I don't know. It's a big old mess. I got no interest. XMTR had earnings down to 48 bucks, right in the middle of the range. There's no good pattern there. Sanmina, that's put spread idea. Although if it's gapping to 19, then the gap's too big. But look at the volume. Wow, I mentioned that I'm going to start putting together MT Live on volume. Just look at these 4 spikes of volume, just those only, and see what the message was. This was a nasty crack. This was actually a little breakdown failure, and this was an igniting from a climb up. So that was a beautiful turn yesterday. NXPI gapping up 208. That's too messy. That NVIDIA was superior pattern, but that had earnings. And then another reason I like earnings for credit spreads is the volatility is going to remain high for a little bit. HLIT, I saw a couple of these pre-market. There's a couple that were bullish turns, this being one of them, but we don't hold over earnings unless it's a core. So this is getting whacked, 980, it's gapping under here. It's not a big target at 980, but maybe day trade. It looks like if it can't bounce in the first 30 minutes, it looks like it's headed to that 200. Another 186 bearish gap cross, but range bound, no interest. Fly W had just an upgrade is all. It could be a put spread. We'll come back. WWD 104 is a bearish gap, but it's on support. But if we can get a call spread over yesterday's high, that would be an idea. This one was another beautiful turn at the 200. It had earnings today. You can see it kind of gapping all over the place, but that's a beautiful turn. I'm putting that in a window. My other computer, PCH, looks fantastic. Now, maybe, you know, it didn't break out like the markets did, but maybe they were waiting on earnings. Triple G, you know, it's making the turn, slowing momentum in a downtrend. I can't tell where it's gapping. I've had earnings. CBT, can't tell where you're gapping, but, you know, also making the turn. Relative weakness, though. That's tomorrow's MT live, relative strength weakness. This is a turn, but I would prefer a bigger price void on the turn, like that PCH I just showed you. Problem is, this is gapping under it, so that's getting whacked on earnings. So that could be another call spread candidate. CAC trying to make the turn in a downtrend. So these need more work. The turn is not mature yet. HP here, I got it in the middle window. This one's making the turn. Had earnings, gapping to 29.40. So this one I like a lot. Maybe 5-minute high. So it's gapping right to yesterday's high, which is at resistance. Maybe 5, 10, 15, 30-minute high, but that looks like he's in the batter's box, provided he holds the strength of the gap. Tech, slowing momentum, downtrend, making the turn on volume, bullish end of day base. Opening kind of flat. This looks fantastic, Detective, put spread. I'll put that in a window. SWK down 10 bucks. Wow, that's an ugly, ugly gap with room to fall. Look at these things. That's what we call a price void. And this one's actually a head and shoulders on the monthly. Wow, left shoulder head, right shoulder, and boom. Let's keep an eye on that for short. And you know what that bell was? You know what that bell was? I bought Home Depot yesterday afternoon, and I had an order in, a GTC order at some at $369.75. And no, that was a toss filled, Detective. So the daily still looks fantastic. But yeah, that bell was me getting filled up there. Nice, nice. I also have some naked puts. A DDS alarm, Greg. This thing, we're not in it yet. It started as a 1, 2, 3, and then 1, 2, 3, 4.